Welcome. In this video we walk through how tax rates apply to self-employed individuals in Denmark, what that means for take-home profit, and practical steps you can take to optimize structure and cash flow while staying fully compliant. Denmark's tax system for the self-employed is built around three core elements: a labor market contribution applied up front, municipal and state income taxes that are progressive, and value-added tax and corporate tax rules that become relevant depending on your legal form and turnover. First, the labor market contribution, commonly called AM-bidrag, is a flat 8% charge applied to gross business income. It is deducted before the ordinary income tax calculation and is a mandatory starting point for most types of income. After AM-bidrag, your remaining business profit is subject to municipal tax, which varies by municipality but typically sits in the mid-20% range on average, and state taxes, which consist of a lower-tier state tax, often referred to as the bottom tax, and a higher-tier top tax that applies above a defined income threshold. You also have a personal allowance, a tax-free allowance that reduces your taxable income, and certain membership-based church taxes for those who are members. The net effect is that an average self-employed taxpayer will face an effective marginal tax rate that combines the 8% AM-bidrag with the applicable municipal and state rates. For many taxpayers, this results in an overall effective tax burden in the high 30s to low 50s% range on marginal income, depending on municipality and whether you trigger the top bracket state tax. It's important to separate marginal rates from average, effective rates. Marginal rates tell you how much tax you pay on an additional krone of profit, and average rates tell you what share of total profit you pay in tax after allowances and deductions. On the practical side, self-employed individuals generally report business profit on the personal tax return. Allowable business expenses, depreciation of business assets, and pension contributions reduce taxable profit, and good bookkeeping is essential to maximize legitimate deductions. VAT, or MOMS, is charged at 25% and applies to most goods and services. You must register for VAT if your turnover exceeds the registration threshold over a 12-month period, and VAT administration adds monthly or quarterly filing and cash flow considerations. Many self-employed people also pay preliminary tax through the BSCAT system. You estimate your expected taxable income for the year, the tax authority issues a preliminary assessment, and you pay installments accordingly. Getting this estimate right avoids interest and penalties while smoothing cash flow. A common strategic decision is whether to operate as a sole proprietor or to incorporate as a private limited company. Corporate profits are taxed at the corporate tax rate, recently 22%, which can make incorporation attractive if you plan to retain profits in the company or want to invest through the company, but extracting profits as salary or dividends triggers additional personal taxation, so the total effective tax on distributed profits may approach or exceed the tax you would pay as an individual. Pension contributions and certain business investments can be used to reduce taxable income in a tax-efficient way. Contributions to approved pension schemes are deductible within statutory limits and also build retirement security, which is particularly relevant for self-employed people who do not have employer-sponsored pension plans. There are a few important technical points to emphasize. Social security contributions in Denmark are largely handled through general taxation and the public welfare system rather than a separate payroll like social security tax, but you should factor in obligations like ATP and possible insurance obligations. Losses from business activity can often be used to offset other income or carried forward according to specific rules, so timely recognition and classification of losses matters. And if you serve cross-border clients, you must consider VAT place of supply rules and potential withholding tax implications in other jurisdictions. To illustrate with a simplified example, if a sole proprietor has 500,000 Danish kroner in gross business profit, they first pay AM-bidrag of 8%, 40,000 Danish kroner, leaving 460,000 Danish kroner, after applying the personal allowance, for example around 46,000 Danish kroner, noting that allowance amounts are adjusted over time, and municipal and state taxes at typical rates. Total taxes including AM-bidrag often consume a substantial portion of the remaining profit, underscoring why planning around allowable deductions, pension contributions, and the choice of legal entity can materially affect net income. In practical terms, start by setting up disciplined bookkeeping, register for VAT if required, file a realistic preliminary income assessment to avoid large year-end tax bills, and document all business expenses and pension contributions carefully. If your profit is growing and you are considering incorporation, run a forward-looking analysis that models corporate tax, payroll tax implications for paying yourself a salary, dividend taxation on extraction, and administrative costs. Often a break-even point emerges where incorporation becomes beneficial for retained earnings, liability protection, or specific investment plans. Finally, tax rules evolve and small differences in thresholds, rates, or deduction limits can change outcomes materially, so treat this as a framework rather than definitive tax advice. Consult a Danish tax professional or accountant to tailor the model to your income profile, municipality, and business plan, and schedule a review at least annually to adjust your preliminary tax payments and entity choice as your business evolves.